The Trump administration says major changes are coming for the Consumer Financial Protection Bureau. Did anybody get a check from the Consumer Financial Protection Bureau from the Lexington Law and Credit Repair.com lawsuit? Watch this. Somebody said they got their check for $784. They went Christmas shopping. This one lady said her husband and her got a check for over $1,600. Number one, paid collections. This is going to be the first change that's happening in 2025. Okay. Paid collections will be ignored from your FICO score. I want you all to pay attention to specific words that I use tonight because we're going to be talking about FICO and we're going to be talking about VantageScore. I'm one of the few people, if not the only person in the credit space. I don't care who you watch. Most people do not talk about VantageScore, or as you all may know, Credit Karma, right? So Credit Karma is the Kleenex of the tissues, right? It's the Q-tip of the cotton swabs. You guys picking up what I'm putting down? So when they hear Credit Karma, they think Credit Karma is the score. Oh no, Credit Karma is the platform for VantageScore, but there are many other platforms that use this algorithm, like CreditWise from Capital One. That's a Credit Karma score, right? If you get a credit score from TransUnion.com or Equifax.com or CreditSesame.com or WalletHub.com, most free scores and some paid scores are VantageScore. But the reason why I'm putting emphasis on that tonight is because listen, people have been cracking jokes about Credit Karma for years, not in 2025, and you're going to see tonight. So either way, paid collections will be ignored from your FICO score. What does this mean? Now, for those who don't know, there has been a major change. A major change. By the way, guys, put your questions inside of the Q&A section. If you put it inside the chat, it might get lost. I'm just being honest. It's a lot of us on here tonight. I want to make sure I get through the information. I want to make sure I answer some questions too, just a few questions. There's a section in the Q&A section. Put it in there so it doesn't get lost. Do a favor for me on that, okay? All right, so now, for those who don't know, FICO 10T and FICO 10 have been the buzz for the past 2 or 3 years. People think that it's just another FICO score. They've come out with a lot of different FICO scores. Currently, the mortgage industry uses FICO Score 4, okay, and FICO Score 2, okay? Then you have the auto industry. They use FICO Score 8, okay? So they've been kind of picking and choosing which ones that they want to use. Here's the situation. In 2025, a lot of that is going to change. It's going to be mandatory for certain industries to use both scores, and we'll get to that in a second. But either way, so FICO 10T is going to differentiate from unpaid medical and unpaid non-medical collection accounts. The reason why they're talking about medical bills is because, like we talked about yesterday, where these states have now, the Colorado, California, and New York have completely removed medical debt from credit reports. We talked about that already, right? But what a lot of people don't know is that this also supports a more effective assessment of the true credit risk of these accounts. In addition, FICO Score 10T ignores all paid collections. Are you guys seeing this? This means if you pay your collections in 2025, and I'm not telling you to pay them or not pay them, I'm just letting you know that once you pay them, that they will no longer be counted against your credit score. In today's time, real quick, be sure to download our free ebook today. All you got to do is scan this QR code right here or click the link in the description below. Now back to the video. No matter if you pay them or not, if they're on your credit report, then it will affect your score negatively. Okay, we know that already. However, in 2025, if you want to see your credit score improve more, you can pay off your collections. Now, that doesn't mean you got to pay them in full. You can work out a settlement agreement. You could do a payment plan. They're looking for zero balance, okay? Now, there is no timetable per se, but it will be guaranteed 2025. Now I know what some of you guys are thinking. Well, Calvin, if I pay my collections and my credit score goes up, how do I know it's going to affect, like, how do I know it's going to affect the FICO score 10 and the FICO 10T? But the problem is, why is it that it's like, who's going to be using that algorithm? We're going to get to that later on tonight. Okay. So that's number one. Pay collections will be ignored from your FICO score. As a reminder, be sure to put your questions inside the Q&A section. If you put it inside the chat, because the chat gonna be lit tonight. I'm letting y'all know that right now. Okay, we about to have some fun tonight. So put it in the Q&A section. You'll see that. You'll see where it says Q&A at the bottom. Okay, so make sure you guys put that in there. All right, y'all got number one. We moving on to number two. Number two, FICO scores will fluctuate based on the last 6 to 24 months. This is one of the pettiest things that they're going to be doing. Here's what they're doing. It's called the integration of trended data. What does this mean? This is the T in FICO 10, okay? So in 2025, we're going to have three major credit scores. FICO 10, which is not going to be used that much. FICO 10T, that's the one that they're going to be standing on business on. FICO, that's the one they're looking for. And of course, VantageScore 4.0, okay? The FICO 10T is going to incorporate a powerful new trended data characteristics that's going to capture consumer behavior dynamics and debt history for the previous 24 months. Let me break that down. Your credit score will now look at what you have done credit wise in the last 6 to 24 months. Now, I know you can't see where it says 6 months in here, but that's where they haven't yet finalized if it's going to be 6 months, but as far as the last 24 months. The reason why they're kind of playing around with that is because they don't want to have, for example, if a person files bankruptcy in 24 months, but and right now in the current algorithm, you would just see the bank, you would get the bankruptcy, your score would drop, and you kind of rebuild from there. The trend that the FICO 10T is not going to have the scores improve that fast anymore. You're going to see this. It's some pros and some cons about tonight. You guys are going to see that. Short version is, if you max out all of your credit cards and then you pay them all off, in today's time, if you were to do something like that, your score would drop and your score would go back up once you pay the balances down. In 2025, you pay those credit cards down, and then I'm sorry, you max those credit cards out, and then you pay those credit cards off in 2025. You're not going to see the exact amount of points that you were able to save. So what do I mean by that? Let's say, for example, let's say you got 3 credit cards. You max them out, or you use a lot of them, right? All around the same time, okay? Now, this is still new, so we got to see more examples of this so I can give you guys more data because it hasn't come out yet. But what I'm saying is that, let's say, for example, you lose, let's say, 100 points from maxing out your credit cards. You now will pay off your credit cards, and you may not get those 100 points back. It may be like 75 points or 80 points. Why is that? Because they're saying, oh, well, you shouldn't have maxed out your credit cards. Is it petty? 100%. They're looking at how your debt fluctuation goes, okay? And don't get me wrong, are there emergencies that happen? Yeah. Like your car may go out and you may need to get a new engine. You max out the credit card, you get paid in 2 weeks, you pay it off. So again, that's why they're flip-flopping between the 6 and 24 months. This is still going to be on the table. That's the second thing that's going to happen. Someone said, Patty, yes, for sure. Okay. No, that's going to be number two. All right, so now number three. Let's go to number three. If you're looking to increase your credit score, qualify for homeownership, or lower your monthly car payment, we can help you. We can take a look at your credit report and create a custom game plan for you to help you accomplish your credit goals. Scan this QR code or click the link in the description below. Now back to the video. Rental trade lines will see an increase in scores, okay? By the way, guys, we got over 10 changes that's going to happen. So I'm just kind of prepping you guys for what we got. We got about 10 changes. Rental trade lines will see an increase in credit scores. What does that mean? That means that the FICO 10T will now include rental trade lines when they're reported. So this is why you're starting to see a huge increase in companies adding rental history to your credit report. We're talking if you rent a house and you're paying that per month, if you rent an apartment, if you rent a condo, if you have a living space that you're paying rent at, it doesn't automatically get added to your credit report. I want to be clear. Right now, people have been adding rental history to their credit reports for years, but they're going to give them a few more points by seeing that a person is paying, because when you think about it, the largest expense that you have is living expense, right? And so now this is actually a good thing, because when you show banks that you can pay $2,000 a month, $1,500 a month, $1,000 a month. I know we got different states on here. Down south, they can pay. You can find a decent place for $800 a month, $1,200 a month, something like that, maybe $1,500 a month. Up here in Chicago, $800 a month. Man, listen, it's life threatening where you live. Okay, no, I'm kidding. But anyway, I know we got different people that's living in different states. So, but that's now going to be on your credit report to show how much you're actually paying. Okay. So again, California said $3,000 plus. And then someone said not in Arizona and not. I knew y'all was gonna be going crazy tonight. Okay. So either way, that's most definitely gonna be helping out. Now, by the way, I wanted to put this in here as well. If you are looking to add rental history to your credit report, this is a reputable company that we've been recommending to our clients. You could use whoever you want to. This is just another recommendation, another resource for you. You can add the previous 24 months to your credit report. There is a monthly fee if you want to add continuous, regular monthly reporting. It reports to all three credit bureaus, and it can show up. They say it can show up in 7 to 10 business days. But again, I always like to give a little bit more time than that, about 14 to 30 days. Okay. You want to learn more about that, scan that QR code to learn more. Okay. Now, next is going to be number 4. Authorized user accounts won't see large FICO increases. This is huge. This is huge. Banks have been fighting this for years. Banks have been fighting this for years. Okay. So now, by the way, guys, quick disclaimer. You guys are going to see people in the comments. It's going to say Calvin Russell test. I don't know what messed up in the system. Just so y'all know, that's not me. These are real people. So if y'all want to change y'all name, y'all can, but it's not the end of the world to me. It doesn't matter. I'll just let y'all know that ain't me. But anyway, but now here's the deal. That's the thing. If you become an authorized user on your credit report, I'm sorry, if you become an authorized user on someone else's credit card, for those who don't know, let's just do a quick breakdown. An authorized user is also known as piggybacking. It's essentially when you are added to someone's credit card and that credit card history is then added to your credit report. Okay. Now, banks have been doing this for years, but they really wanted it to be so it could be for family and friends, not because of the credit history. They could care less about that. They more so want to make sure that multiple people are getting this credit card. So multiple people are using this credit card so they can make money. They want the chances to increase that people are going to make money. They want one person to have a card. They want their family to have that credit card. They want someone in the family to use that credit card so they could potentially make money off of interest. That's the purpose of being an authorized user. On the back end, they know, of course, the credit card history has been always added to the person's credit report, the authorized user. And of course, people have been doing this for years to improve their credit scores. In 2025, that's going to change. What does that mean? So here, FICO 10T differentiates authorized users. So that means, now for those who don't know, oh, and real quick, I'm going to go ahead and pull this up. Just real quick, I noticed someone just asked about some links inside of the comments. So my wife told me to do this earlier too, and here I am. So here, I'm going to make sure you guys get the links that we was talking about. That way you guys don't have to search for it and things of that sort. So here, I'm going to make sure it's there, and we're going to put it inside the chat. And so that way you guys are good to go. Okay, perfect. Okay, good. So we're good to go there. Okay, you guys are going to see that. Okay, so you guys are good to go there. All right. So backing out of that. All right. So now, again, so it's going to place less emphasis on authorized user trade line information. What does that mean? That means that now, when you're added as an authorized user to someone's credit card, Will you see an increase? We don't know yet. But it's looking like what they're doing is they said they're gonna place less emphasis, not no emphasis. That means less emphasis. That means that people are going to see a huge decrease, not in credit scores right now. I want to be clear. But we're talking about when someone adds brand new trade lines to their credit report, you're going to see less of a point increase. Okay. So, for example, when someone like currently right now in today's time, people would say, hey, I got a credit card, it's 5 years old, 8 years old, 10 years old. It's got a $20,000 limit, flawless payment history, right? No balance. If you get added to something like that, you're going to see a nice, increase in your credit score, depending on where your credit score is. What they're saying is in 2025, you're not going to see that same type of increase, if any increase at all. So we will keep you all posted on this. Now, I want to make one thing clear. Everything with FICO is not going to change at the snap of a finger. Okay. You have to understand this is a new algorithm, but a lot of industries will be using this algorithm by the end of the year. What I'm saying is that let's say, for example, in March, you get a trade line or someone gets a trade line or they become an authorized user on someone else's credit card. Will they see a point increase? Yes, on all other older FICO score models. But by the end of the year, you're gonna see. I'm gonna show you the industries that's gonna be switching over. Okay. But either way, this treatment mitigates the risk associated with the rental of authorized user trade lines. Do you all see the language they're saying? This treatment mitigates the risk associated with the rental of authorized user trade lines. They know people have been using authorized user trade lines. They've been new this. But what are they saying? What they're saying is it's hard to calculate the risk. It's hard to calculate the risk of something. If a person was a 540 credit score, they let's say that they get added as an authorized user on multiple credit cards. I'm not saying it's right or wrong, but now there are 700. So the banks are like, oh, this person's a 700. Let's approve this person. Let's give them low interest. Let's give them approval for the loan. But in reality, that person is still a 540 because they haven't done the work yet to improve their credit scores. Again, I'm not saying whether things are right or wrong. This is why they're putting these things in place. So I'm telling y'all, it's most definitely going to change for sure. Okay. So that's what's going to end up happening for sure. All right. So now let's go ahead and go into it real quick. All right. So supporting a more effective assessment of the true credit risk these accounts represent. All right. By the way, guys, my assistant is inside of the chat. She's going to make sure that you guys go ahead and get the links for tonight as well. All right. Number 5, new personal loans will stagnate or lower your credit scores. This goes back into the trended data. FICO score 10T is developed on more recent data to account for changes in credit risk trends. What does that mean? Such as the increased prevalence of personal loans. They are now going to slow down your credit score if they see multiple personal loans. They haven't. Now, here's the deal. It says the prevalence of personal loans. That's with an S. The reason why I'm so particular on this language is because this is a new algorithm. We haven't seen anyone yet with the algorithm yet. They have tested this out, but I haven't seen on the credit reports and the scores because the scores aren't necessarily reflecting. Now, you can see certain scores and certain reports, but I haven't seen enough yet to say, okay, this is this. But by the end of next year, we'll most definitely have an update for sure. Okay. But either way, so I'm saying that to say I don't know if it's one personal loan or if a person gets multiple personal loans or if they get one personal loan twice a year. You guys get what I'm saying? So either way, they're essentially saying that it's most definitely going to change your credit risk trends, such as having personal loans. Okay. The FICO score 10T includes a new personal loan characteristic to enhance the model based on those trends. I know it's crazy. I know it's crazy. All right. Next, number six. Number six. Banks and credit unions are now accepting. I know y'all been waiting on this. Banks and credit unions are now accepting VantageScore 4.0 / Credit Karma. Now, here's the deal before y'all start going crazy. Before y'all start going crazy. Let me explain what this means, okay? I got a lot of jargon up in here. I'm gonna make sure y'all understand this. Number one, they've already tested this out. I want to be 100% transparent. This is not something they're like, hey, we're gonna see if this works. Oh no, they've already tested this out in San Francisco, right here in Chicago. The Veterans Administration just jumped on board in September. For those who saw that video, I don't think I dedicated a video to it. I knew I was gonna do it around this time. And then, of course, the Federal Home Loan Bank of New York. What does that mean? This is also a credit union, AmeriQ Credit Union to accept VantageScore for mortgages, open pathways for homeownership. You guys can see right here, it says right here, the implementation of VantageScore 4.0 in 2025 will therefore yield immediate and significant benefits in expanding access to the mortgage market and narrowing the home ownership gap for credit-worthy people of color. Now, here's the deal. It has nothing to do with people of color. Let's be clear on that. I don't want nobody to feel like, oh, well, this is only for black people and stuff like that. No, 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 no. They were just saying in general that a lot of people that have thin credit files or no credit at all, okay, this is going to help a lot of people. We're talking, listen, you guys are going to see the numbers here. I think it was like 3 or 4 million alone are now going to qualify for homeownership at the snap of a finger. People that, because for those who don't know, if you have no credit score, it takes 6 months to get a credit score with FICO. Okay. Now with VantageScore, it's a little bit quicker. That's why FICO came out with FICO 10 and FICO 10T. Okay. So again, more banks and more credit unions. Now, there was a video I showed a list on. I don't want to bring the whole list here, but there are over 50 to 75 credit unions nationwide that is now taking VantageScore. You're going to start to see more advertisements and everything as this continues to roll out. Number 7, okay? Number 7. Hold on one second. Okay, number 7. The FHFA, okay? This right here is the FICO 10T and VantageScore 4.0 Credit Karma 2025 timeline. This is the timeline, guys, okay? So watch this. Watch this. Here we go. So now this is 2023. This is what I was telling you guys around this time, 2023, 2024. And I remember some of those comments. This one lady was like, oh, well, that's not much is finna change and this. I keep telling y'all, this is real, okay? So right here, you guys can see, I'm gonna zoom in on this. And it says to be determined, but they said for a fact by the fourth quarter of 2025, they're going to implement tri-merge and bi-merge. Wait till you guys see what's going to happen. But right here, where it says to be determined, lenders will deliver FICO scores 10T and VantageScore 4.0. We've never seen this in history. Since 1983, when FICO score came out, we've never seen competition neck and neck with FICO, okay? That's how we got to this point. For those who don't know, VantageScore was suing FICO. And essentially they were saying that they were monopolizing the industry. But banks have been in bed with FICO for years until 2025, all right? But it says in addition to the classic FICO scores as well. Now, because they're going to be making the transition. What does that mean? Let's go to number 8. VA loans will also now accept VantageScore 4.0 and Credit Karma. If you guys have watched any of my lives like recently, I kind of hinted on this, but I want to let you guys know VantageScore is officially approved. Now, what's the benefit of this, Cal? What's the benefit of all this? Let me break this down. Let's say, for example, your FICO mortgage score is a 580. Or here, I'm gonna give you guys 2 scenarios. Let's say it's a 540, okay? A 540, but your Vantage score is a 590. If you go by your FICO score, you do not qualify for homeownership. But if you go by your Vantage score, you now qualify for homeownership. You guys get what's going on? So that's how that could benefit you. I'm gonna give you guys another scenario. Let's say your FICO score is a 580, okay? You already qualify, but your Vantage score is a 640, right? And it may not be that much of a difference, maybe 620, 640. With your FICO score, you qualify for homeownership. With your Vantage score, you not only qualify for homeownership, you qualify for homeownership and down payment assistance and a better interest rate. You guys get where I'm coming from? This is huge. So any veterans you know, again, that have been denied in the past, no, for homeownership, let me tell you something. And by the way, guys, this is not just veterans, but I wanted to make sure veterans understood because that's a different loan type. When you're buying a home, most people go with a FHA loan, which is 3.5% down, or a conventional loan, which is 3%, 5%, 10%, 15%, or 20% down. But with a VA loan, that's a different type of loan. They have to qualify for that loan and be, of course, a veteran as well too. That's a zero down loan. So this is major news for veterans. Number 9, FICO scores are increasing prices for banks and credit unions. What does that mean for you? These banks not going to pay for this. You going to pay for it. So you're going to see when you go to the dealership and they run your credit, you're going to see they may add on that extra fee for credit reports and credit scores. When banks run your, this is, by the way, this is nothing new. Anybody that's watching this has been in the mortgage industry, they know they've been paying for credit reports, but the price is now going up. And some lenders have already been passing this along to the consumers. Now, the Biden administration said that credit report fees are junk fees. But we got a new administration coming in. We're gonna talk about this new administration that y'all had to have. Okay? No, I'm kidding. I ain't trying to start that up. But anyway, this is going to be huge because let me tell you something. The Biden administration fought against this, but I'm telling you this right now. The Trump administration is going to let this ride out. I'm telling you this because once I show you this next piece, y'all going to see. But either way, credit reports will now go up 20%. They're now 20% more expensive in 2025, and mortgage companies are upset because one or two things are going to happen. Y'all already know what's going to happen. They're either going to pay more, they're going to lose profit. They're going to lose profit. I know what you guys are thinking. Well, Calvin, they're going to make money when they sell the house, right? Yeah, if a person chooses them. You got multiple scenarios. Scenario 1, person walks into a bank, they get their credit ran, then they go next door, they walk into a bank, they get their credit ran. Two different banks have two different answers. Person chooses one bank. That other person is now stuck with that amount of money. So they're stuck with that. Now I'm not saying that banks are right or wrong. What I am saying is that now that's just the person that qualifies. What about the people that don't qualify? What about the people that never close on a house, right? Because FICO got to send them that. This is another reason why VantageScore is going to be on the move in 2025. Is because FICO keeps making so many changes. And you guys see right here, they were already going from $3.50 to $4.95 per score, but it's going to be going up way more than that, okay? And it's also going up to $8.70 per joint application for a tri-bureau credit report, okay? And again, that's going up in 2025. But again, the banks, I don't see all these banks saying yes to this price increase, which means it's going to fall on the consumers. We're going to see how this whole thing play out. Number 10, the Trump administration says major changes are coming for the Consumer Financial Protection Bureau. Now listen, let me break this down. Okay? So now Trump is he cannot dismantle the Consumer Financial Protection Bureau. By the way, I don't care who you voted for. I'm just giving y'all facts tonight, okay? So here's the deal. He can't get rid of the Consumer Financial Protection Bureau, but what can he do? He can change the people running it. I'm going to show you all in a hot second why he's going to do this. And y'all know his right-hand man, Elon Musk, said right away, delete CFPB. There are too many duplicative regulatory agencies. Let me tell y'all something. They never said anything about the Consumer Financial Protection Bureau for years up until now. Do you know why this is a big deal? Let me show you all why this is a big deal. Did anybody get a check from Lexington Law? Did anybody get a check from Credit? I'm sorry. Did anybody get a check from the Consumer Financial Protection Bureau from the Lexington Law and CreditRepair.com lawsuit? By the way, that video is the #1 video on this topic on TikTok, by the way. And that's my video. But anyway, check this out. Listen, let me show y'all this right here. Somebody said still waiting. Watch this. Somebody said they got their check for $784. They went Christmas shopping. This one lady said her husband and she said her husband and her got a check for over $1,600. We went so fast to Wells Fargo. Merry Christmas, they said. We had one for over $60,000 and threw it away. I don't know if I believe that. But anyway, I'm telling y'all, people on TikTok going crazy. This one lady almost threw her check away. Okay, so again, this is what y'all see what that check says right there, right? Consumer Financial Protection Bureau. All of these companies are saying, listen, I'm tired of these companies getting in our business. We need to put a stop to this. So Trump, we need you to figure this out. Just so y'all know, I haven't even had time to do the videos on the other companies. Now, I did Lexington Law and CreditRepair.com because that's our industry. We know about that. But listen, let me tell y'all something. We're talking about Rocket Mortgage. So if anybody has ever applied for Rocket Mortgage, whether you got approved, whether you got denied, listen, there's some checks coming your way. There's checks coming your way. Walmart and Branch Messenger, they illegally opened deposit accounts for more than 1 million delivery drivers, and they made over $10 million in junk fees. Woo! Listen, if y'all know anybody that's been doing the Walmart Spark Driver program, money is coming. Listen, man. Now, here's the deal. Now, this lawsuit is brand new. Just to give you guys a timeline, the Lexington Law lawsuit started in 2023. It took a year for them to get them checks out. So this Walmart situation, when the Trump administration come in, they may close this out and people may not get paid. That's why the Trump administration is coming in and they're going to stop the Consumer Financial Protection Bureau from sending all these checks out. I'm telling you, that ain't the only one. Student loan companies. Now, I'm not saying these companies are doing the right thing or the wrong thing. These companies actually made mistakes. They should be paying these people back, right? If you listen, am I right or wrong? If I'm right, put right in the comments, right? If they made a mistake, then and they charge us and they overcharge us for fees, this is the American consumers. We should get a check. Everybody don't think so. Everybody don't think so. So let's make sure y'all know what's going on. That ain't all the Trump administration is doing. And this ain't got nothing to do with Trump. He just happens to be the next administration that's coming in. Watch this. But one thing for sure that will happen, a Capital One and Discover merger, it's about to go down. It's about to go down. I'm letting y'all know that right now. Matter of fact, for those who haven't been keeping up with it, they've already received approval from the local state commissioner on Wednesday to acquire Discover. This is a key piece. They are 80% done with this merger. They already said it should be done by the first quarter of 2025. It's going to happen. It's going to happen. What does that mean for you? I think it's a good thing, but a lot of people feel like it may be some craziness going on. But based on what I know about Capital One and their client base, based on what I know about Discover and their client base, I don't see too much wrong with this, to be totally honest. But we're going to see, because usually when companies merge, people get fired. So we're going to see how that whole situation goes for sure. All right. Now, here's the thing, guys. Number 12, we wrapping up. Number 12, lenders will now pull 2 credit bureaus instead of 3. This is one of the biggest changes in 2025. Watch this. Watch this. Watch this. Lenders will pull 2 credit bureaus instead of 3. What does that mean? Y'all know what's about to happen. There's a possible credit bureau that may be removed. Here's the worst part. We don't know which one it's going to be. But here's what I can tell you. It won't be Experian. It will not be Experian. So I'm letting y'all know this right now, because what's the purpose? What's the purpose of having 3 credit bureaus if you're only going to pull 2? By the way, now people get more credit cards, more personal loans, more auto loans than mortgage loans. So they're testing this out first with the mortgage industry. This is going to be huge news. Y'all see right here. Watch this. Reduced credit report requirements. Lenders will now have the option to pull 2 credit reports instead of 3. There's 2 reasons why they're doing this. One, they want one of the bureaus to go away. That's number 1. Number 2, they said, since y'all increasing these prices on these credit scores, we don't even need y'all. We don't need all of y'all. We just need just 2 of y'all. It's about to get crazy. 2 credit reports instead of 3, reducing the costs for borrowers and potentially leading to a better competition among credit bureaus. While some lenders may still opt to pull all 3, this shift could lower borrowing costs. Now, they're testing this out. This is year 1 of the test. This is year 1 of the test. It could also go backwards, right? It could also say, hey, listen, we want to choose 2 out of 3, and then it may not work out. But I'm telling you, anytime people go from saving money, it's a wrap. It's a wrap. So listen, I'm telling you, it's about to be crazy for sure. Now, who do you guys think? Put inside the chat, who do you guys think is going to be the one that's going to get kicked out? Do you think Experian going to get kicked out? Do you think TransUnion going to get kicked out? Or do you think Equifax is going to get kicked out? Listen, listen for sure, man. I think it's gonna be Equifax. To be honest, I don't know, man. I think Equifax has been in a lot of trouble. They've been in a lot of trouble lately, man. We're talking like 4 or 5 years. They were one of the first ones to do the data breaches. So I don't know. That's just my take on it. We are going to see what's going to end up happening for sure. But we most definitely gonna keep you guys posted on this as well. Here's the thing, guys. I want you all to win in 2025. That's why I put on this webinar. If you want to buy a home in 2025, this will affect you. If you want to buy a car in 2025, this will affect you. If you want to pay down your debts, this will affect you. I want to help you get in the best position possible.